Well, good day, all. I'm Epstein, and here we are with your Spider ETF stock market wrap-up, and this wrap-up is for the evening as we're here now on Wednesday, the 1st of November, 2023. Well, the political landscape is changing. Mitch McConnell let out the bag that the Senate would be very willing to consider a package for Ukraine and Israel as long as it contains what they want on the border. Now, please listen. We've heard that before. It's gone nowhere. This is changing. Our mayor, I live in a heavily Democratic city that is going broke. They are spending $40-50 million a month on immigration. I might be way off on my numbers. I mean, it's insane how much they're spending. They have nowhere to put them. People can't work. The Biden administration, this includes all of them, have their head up there, you know what. They don't see what's going on, and we're a heartbeat away from that idiot Camilla. I just got to say it. I mean, wasn't she taking it? Go back and look. Her job was going to be to control the border. I remember when Biden took the office. We're giving it to her. She's very capable. Yeah, that's how it looks. And in a heavily Democratic city, they want to change us now to a non-sanctuary. It's going to make it on the ballot from the looks of it. Our mayor tomorrow with other mayors from across the country are running to Washington, hat in hand, begging for money because the cities can't take care of their own, let alone the immigrants. This is the Democratic Party at work under the helm of this president. It goes there, it stops there, and it's where it ends. And you know how quiet he is. He's scared to go to the border himself. All right, I got it out of my system. I like to get a political thing. If you don't like it, don't watch the channel. That's your invite. Now, let's get to what happened with the market today. The Fed move, important. They did nothing. That was widely anticipated. The second part is they kept open the option that they will raise interest rates if conditions warrant. They again reiterated that there's a lag effect. They're seeing that take place. They brought up the fact that inflation, wages have now gotten to the point where they're over the inflation pressure and people are actually getting money in their pocket, and that does pressure the inflation story. So the question is, have people bought enough where it just falls on its own, or is it going to hit that sticky spot which we're at and fall? We don't know. We get a U.S. jobs report on Friday. And then before the next, I believe I'm right, before the next Fed meeting in December, we'll get another set of all this data so the Fed can chew it. Do you expect that even if the data is super hot, think about what I'm saying. For Christmas, the Fed is going to raise rates. They could, but it's probably not going to happen. So I think they're counting that the U.S. Treasuries moves, raising rates if they've done, has slowed everything down, and the market's getting a chance to breathe, and possibly things will fall. Read what he said. I did a whole write-up on it tonight. I'm printing out the Fed statement. It'll all go to my subscribers, and they'll have that in their hand. You could have that too, by the way. Before I get into the charts, let me just bring that up maybe. We have all these free offers, but one of these is free access to my research if you haven't had it. And I write as I talk. I lay out things. I do it in outline form and then commentary with it. But I make the point, and it's all geared for you to read in 1 to 3 minutes. I believe that's the way to write. Trying to write books for you every night and say the same thing over and over. How many times can you rehash it? You don't have to. You bring different parts into it, and we do that. But you get all the rest of this. You go to irapstein.com under free offers. You can click up here. There'll be an icon for it as well. And anything you click in there goes into a cart, and then you put in your email address and so on, and we get it to you typically the next business day. Okay? All right. So now let's talk where we're at in some of the markets. Am I going to be right that we're going to get a Santa Claus rally becomes the first thing in my head? Well, right now, the headwinds, no, the tailwinds with me. I don't think I have a Fed that's super aggressive right here. That's a tailwind pushing me. The market's come down pretty hard, okay? People have good jobs. So far, the JOLTS data today didn't show any weakness in those markets. So I can see that the stock market as a whole wants to give us that rally into month end. Beyond that, I don't know. But I'm expecting that to be the case, all right? So I'm hoping Santa Claus is there for the end of the year. When we take a look at GM and Ford, you see a mixed bag here. Lucid down 7 cents. There's no real story. We get Apple earnings coming out for you right away. You want to keep your eye on what we're doing here with Amazon, Netflix. I think that's going to be important. Schwab is certainly stuck its head up, and I like that. And Home Depot did the same. The market's feeling better. That doesn't mean I think we're getting ready to run and say, hey, we're back into a full-blown bull phase. That is not what I'm saying and not what I'm thinking is going to happen. But a nice bounce after a terrible September, a brutal October back and forth, and I think you're going to get a bounce off of that right now. We'll see if I'm right or wrong. When I come to NXE, you know I brought this up for a reason, that I happen to think atomic energy is something we have to look at. And that's what I try to do. When I brought Darden up and I showed a bear chart, I was showing you the reasons I thought it would go down. The consumer is never quite as bad. I really brought that up because I thought students wouldn't have the money they had to buy things. Well, I think I'm right on that. You know, they're still paying off loans and so on. And those things came down and the market came down hard. This does not mean I'll be right but the reason I'm bringing it up, I think we're forming a base. And this market could be an interesting play longer term. You don't have a buy signal yet. You have a lower low, higher high, but we'll look at the weekly chart this weekend and see if that's kicked in. You can certainly say the bias is up. The market has been able to stay over the 18-week average of closes, but you're in a resistance area of the Bollinger Band. The Bollinger Band, these black dashed lines, you only stay under them or over them 5% of the time. That doesn't mean you can't run the band and go higher and higher, but actually getting over and staying over and telling me it's going to go to the moon, that is how they build Vegas on guys like you. That isn't what it quite does. So you're at that area right now where you've come off these lows, you're getting a little rich. I'd wait for the chart action to pull back and be a little prettier as far as I'm concerned. Plus, it's overbought. We then get to Rivian, and as you can see, still somewhat in a downtrend. You probably get a pop to the upside when you lose the bearish embedded reading with the red line over 21. Until then, no, I'm not seeing it at all. Still in a bear phase. In gasoline, I'm bearish still, and I'm bearish heating oil at this time of the year. People go, what? It's going to be cold. You got to have heating oil. Yeah, but they've already built it. They've already been producing it like mad. They have the stocks on hand, and hedging goes on at this time of the year. So I'm still in the bear camp, and so far it looks right. I wouldn't be surprised if you get to 61.22, but you're oversold. So deploying new money in an oversold market, let the other guy have it. In XLF, now you've come back to the resistance point of the 18-day average. So this big break is ended. Now you're in a pattern of no trend, getting a bounce out of that and in a resistance zone. I don't see a trend at work. In XLI, you've been in a downtrend and you just, now let me just show you the word just. If you take a look here, this was Tuesday. You were flirting with losing the embedded reading. You lost it now. That means before the market gets under this low, I am fully expecting you get to the 18-day average. If you haven't taken my course on Bollinger Bands, we call it the Enhanced Bollinger Band course. You want to take it to learn this technique. Doesn't mean I'll be right, but the percentages of it are stunning. Yeah, stunning. Nothing's 100%, but stunning. Go in and look at it. Each time you lose that, before you make that low, you go to one of these numbers, and I teach you how to look for that and what you see in the course. In AI, we're finally back down to where I think the support will show up in a more serious way. The 18-day average, the lower Bollinger Band in a downtrend, but now you're oversold with everything. Then we get to RSPD. Be careful here. You're ready to pop. All right, take a look. You're at an 18 reading, you closed right at the high. That means to me a steady to higher opening. What happens here is I think this will become today's low, the trade bottom. And if you get to short covering, wherever that 18-day average comes in, because it'll drop a little each day, I think will be the upside target. In the home builders, well, why did they come alive? Let me think about it. Oh, God, this is a hard one for me to think. Oh, yeah. If interest rates drop or don't go up anymore, isn't that favorable homes? And if you're looking, are we at 5% rate now? No, we're closer to 4, 8. It's not a big drop, but it's not 5. And this market's now come alive. But you're now at a point where you've got some resistance. What if it just sprang to life here? Then up here. But I think you got your problems right where you're at, the 200-day average and the 18. But you did come out of the embedded, and you did. Here's the trick again. You lost the reading, and you went right where I teach. How do you catch it? How do you work with it? And by the way, your stochastics will not look like mine. They won't time the way mine do, and so on. You got to be a subscriber of mine to get all this info. In XLE, higher highs, lower lows, oversold. Don't see anything on the energy there. GLD, okay. We could fall back here. Now you'll say, Ira, there's a war. What's wrong with you? Well, any close under 7,900 is in the gold market on the slow stochastic is a sign that prices should go back to the closest main moving average before it gets over that high. So momentum could be lost tomorrow, just like that. Lickety split. And if that's the case, fine. Would I get bearish? Absolutely not. It's a question of coming down, maybe coming out of the longs, grabbing your money right here, and redeploying money on the long side as long as this Israeli situation happens. Why? Because Iran could still get very involved. Do you think Israel's let up? Does the news to you every night look as though genocide isn't getting and picking up in a major way, according to what the Palestinian point of view would be? I would think that that's what they're saying, and they are. And from their point of view, they are right. Israel's point of view is get out of the way. You know where the Hamas are? We're going after them. They're underground. We're dropping our bombs. Don't get me into who's right and who's wrong. They're both right and wrong. It's that simple. I'm on both sides of it. You can see what's going on there. But what if you drag Iran into it? Okay, then all of a sudden the gold market goes up again, energy goes crazy a little bit, who knows? You have a powder keg, you got 300,000 soldiers ready to do things, and you don't want to get bearish in that circumstance. It's one thing to be willing to take money off the table. It's another to get bearish. SLV, well, you got to your key points. And I know a lot of people just will tell me, oh, you don't get it, Ira. This is a war and blah, blah. And I just go, no, I do get it. A chart point is a chart point. You're better off on a chart taking the name off the chart and trade the pattern and see if you would have been buying then the 200 and the 100-day average in an overbought market. I don't think so. Copper's still not good. China hasn't been able to lift it up, and it's liable to embed it. If it does, then I have to get bearish on the market again. TLT, well, this is your short covering rally right up into the neutral number of the 18-day average. You're out of the downtrend. You're not in a bull trend. There's the difference. UUP, I'm looking for all kinds of resistance in the dollar at the upper Bollinger Band. It's what I always do. You're overbought. You're in a sideways action. I think the smart money came out yesterday, not today. Yesterday, I don't think they left anything on the table. And on FXE, I think the smart money came out today at 97.04. That was the low against the Bollinger Band, 97.03. It could go lower. It's in a downtrend, but you're caught in the sideways action. Is there an edge in selling a Bollinger Band? I've never seen one. So the answer is, in my opinion, no. So you put it together, you get your game plan, you go to our website, iraepstein.com, you pick your free offers in the free offers section, or you click up here, and I'll catch you first thing in the morning with the morning financial news. You take care.